Welcome to Markets Today. I'm your host, Mbithe Muema. It's a start of a new week as well as a new month, so certainly happy new month to you. We will be doing a recap of what happened last week on the Nairobi Securities Exchange and also looking at the key headlines that will be driving performance on equities for this week ahead. Later on, we'll do a recap of the MPC meeting that was facilitated last week on Wednesday by the Central Bank of Kenya, and there was a media briefing hosted by Dr. Patrick Njoroge, who is the head of the Central Bank of Kenya. For that, we'll be having an in-depth conversation with our guest in studio. Our guest, I will introduce his name as well as his credentials a little bit after this overview for the market. Last week, turnover was down 62% compared to the previous week. The total turnover was 1.6 billion shillings traded. The key activity and the key news factor for last week was Safaricom, which announced its full-year earnings for the year ended March 2020. Earnings were up 14% to 74 billion. Revenues were up about 4.5% to 251 billion. This company was able to deliver a healthy bottom line off the back of increased efficiencies. One of the key things that we had in our conversation with the head of the finance department, Mr. Satish Kamath, was the fact that they actually changed some of the accounting standards and there was a reprieve from their cost of depreciation, which was able to give them healthier margins closer to the bottom line. In other words, efficiency was the key driver for the numbers that we saw coming out last week. The company did issue a final dividend of 1.4 shillings per share, subject to board approval, and we will give you the payment dates once these are approved. Over and above that, the banks were the other key trading stocks in the Securities Exchange. The quarter has ended, and we expect any time from now to start hearing from the tier ones, the likes of Equity Group, KCB, Cooperative Bank, in terms of what their expectations have been or experience has been during the onset of the COVID, and whether they have any key concerns in as far as the growth of the economy is concerned. Talking about the economy, we did see the numbers for the economy also released last week. There was a bit of a downward performance, largely driven by a shortfall in rainfall, especially which had a direct impact on the agricultural sector. We will touch on this, albeit briefly, as we go into our in-depth conversation for the day. Being the start of a new week as well as the start of a new month, just to give you an overview of where we are at in as far as the COVID-19 pandemic in Kenya. So far, 465 cases have been confirmed. We have a total of 24 fatalities, and that was as at the end of the weekend, which was 3rd of May. So not too much has happened there, but the country still continues to actually instigate measures to be able to avert any crisis that would come as a consequence of this. What I'm finding very interesting as well is the fact that we also have the onslaught of floods in the country. So far, we have seen about 100 or so deaths reported as a consequence of these floods that have been impacting several parts of the country over the last 2 weeks. It looks like there's a culmination of a couple of risk factors affecting the country today. We have COVID, we have the incidence of locusts that has also been reported. We also have the incidence of floods. Now, all of this are expected to have a negative impact on the agricultural output. What does this mean for inflation? What does this mean for the outlook of the economy? That's a conversation that now we will be having as we engage with Mr. Renaldo D'Souza. He is the head of research at Sterling Capital. Welcome to the show, Renaldo. Renaldo?
Yes, I can hear you. Thank you. Yeah.
Maybe you can just give us a view of what's happening in equities, then we can delve into what your views were of the MPC media briefing.
With regards to equities, Safaricom is the main focus for most investors. Last week, they released their results for the year ending March 2020. I would say it was fairly good results based on the circumstances and the world we're living in right now. If you look, what surprised me most was the growth in mobile data, in spite of the competition from both Airtel and Telcom. M-Pesa growth fell below our expectations, but it's still fairly good. Voice and SMS as expected, declining. But this is a trend we expect even going forward.
What is your read of the numbers over the next 12 months, and how does this compare with the price that we are seeing on the securities exchange?
And something we need to take into account also was the one of 3 billion they earned because of the deal they did with Vodacom. So that you can write off in the next year. Earnings I would expect to be a bit growth to be a bit slower considering what we're experiencing in the country right now. The COVID-19 pandemic is going to hurt the business. If you look at the impact on M-Pesa, the last so far they're talking about the period between March and June, they're going to lose about 6.5 billion because of the waiver of fees and commissions. So it's going to be a tough year for Safaricom, but still we expect positive earnings.
Fantastic. Now, Central Bank of Kenya last week actually cut back the MPC benchmark rate by 25 basis points. We are now at 7%. What was your read of this, and were you able to actually listen to the governor's remarks as he hosted a media briefing thereafter?
Yes, I was able. The CBK seems optimistic that the MPC adjustments are beginning to to be impactful. They're talking about an increase in credit growth. They're also talking about a decline in NPLs, although this is largely because of restructuring of loans. So the CBK believes that the decision of the MPC to lower both the cash reserve ratio and the central bank rate have been effective.
Effective in your view?
I would say fairly, they have been effective, but the extent is just minimal, at least now. But think of it this way: they have reduced both the CRR and the CBR with the hope that banks will start lending, but the risks of default are still there. In my opinion, actually, the risk of default has increased. If you look at personal customers, for instance, you have a significant proportion of the working population losing their jobs, or even some having to take pay cuts. So this reduces the ability of or to meet their debt obligations.
Couple of risk factors that are coming into the economy of COVID. Now, the central bank also gave an outline of how much money has been extended to the different sectors. I was able to glean that money has gone into real estate and into hospitality largely. Are these some of the areas that have been largely affected by COVID? And are there any other areas that you see could possibly have the second round of effects as we continue into the year?
COVID-19, in my opinion, has affected virtually all sectors of the economy, whether it's the financial, hospitality, or manufacturing sectors. For instance, if you think about hospitality, it's quite obvious that with the halt of flights into the country, there's no visitors coming in, and also the restriction of movement because of the partial curfew. Means that people are unable, even domestic tourists are unable to visit the hotels. Also, people are very cautious about spending at this point in time, probably because of loss of income, also the uncertainty about the future. So people are cautious about spending at this point in time. When you look at manufacturing also, because of this reduction in disposable income, they've had to scale down on operations.
There are many negative factors that are happening on the ground, yet the central bank governor sounds very optimistic. I don't know, I get the sense that it's imperative, or rather it's very important that he gives us an optimistic outlook, but I'm a bit concerned, I'm a bit more conservative. I think there's a bit more pain to come. Am I overthinking, or how should we read what's happening in terms of central bank makes a decision, this is what is happening in the economy? How do I dissect this information for just the person on the street?
Personally, I'm not as optimistic as is. Considering, for instance, he talks about, or the MPC release talked about GDP growth of 2.3%. When you think about it, we're almost halfway through the calendar year and near the end of the financial year, the 2019-2020 financial year. We've lost a lot of ground with very few sectors performing. When you look at also in terms of the fiscal position of the government, where the government is unlikely to meet its revenue targets. We've already seen about 3 revisions to the revenue targets, downward revisions, and with the tax cuts proposed by the president to mitigate the impact of COVID-19 on Kenyans, we see further reduction in revenue collection. So the picture is fairly grim, but yes, we're halfway, but we don't know what's going to happen in the next 7 or so months.
Renaldo, you bring out a very interesting context in terms of the government revenues, the adjustments to the revenue expectations, as well as the fiscal deficit. Maybe you can walk us through briefly, what numbers are we looking at as at today?
So when you look at the revenue target, the supplementary estimates, they're talking about 1.6 trillion shillings in tax revenue collection. The latest data available is as at the end of March 2020, which was showing tax revenue at 1.1 trillion. The supplementary budget also shows a deficit of about 129.1 billion. That's taking into account both domestic and foreign deficit financing. So the central bank has to look for a way to meet this 129 billion in the next month or so.
Do you have a sense?
The next year, the fiscal budget was reviewed slightly downwards, with the main cuts being on development expenditure. So the government realizes that there's a challenge in financing the deficit and has decided to cut down their expenditure target. This is probably the first time we're going to have a lower budget than the previous year. So based on this, we're going to expect a cut on spending. And as such, the government had already projected a cut on domestic financing, or actually on financing, both domestic and foreign. But we're yet to see this because we expect further revisions of the budget because of the COVID-19 pandemic.
So we have a situation where the tax revenues have been revised downwards. In as much as the expenditure has also been revised downwards, there's a bit of a deficit. And yet the government is saying it will not necessarily borrow internally or externally to finance this gap. What happens? Do we get into a space where consumption tax increases? Do we get into a space where there's an upper hand, or rather a tighter hand, looking at businesses and their operations and trying to extract each and every possible coin from these operations? What happens in such a situation?
So if you look at the measures proposed by the president, he was taking with one hand and giving with another. So the target seems to be mitigating the impact on households, so reducing income tax, reducing VAT, while on the other hand, he seems to have increased some taxes on businesses. So the government's trying to find the best balance to, in terms of tax collection, because they realize that with the subdued economic activity, its tax collection will go down. But this being said, there's also something the government can do with regards to expenditure. The first is cutting down on development expenditure, which they have done, because a significant proportion of this expenditure was on infrastructure projects, so areas that can actually be expenditure can be reduced or postponed. So the priority right now would be on meeting the short-term expenditure items. We might see the government also renegotiate on external debt as its debt obligations take a big proportion of its tax income.
Press briefing, did you get a sense of what is expected? I ask because we have seen the IMF release about $3.4 billion to Nigeria. Do you have a sense of what we should be expecting in terms of emergency funding from the IMF or the World Bank or other partners in that space?
Most of the funding coming from IMF and World Bank would be targeted at the health sector. That means improving our preparedness to deal with the COVID-19 pandemic, rather than say budget support. But also take into account that the government is still negotiating with the IMF on the standby credit facility that expired last year. This is a facility that would just be tapped into in the case of emergencies and would not be used for, say, budget support.
An emergency. And what about remittances? We did hear an expected 15% drop in diaspora remittances over the next year. Is that a thing that worries you? Would this have an impact on our currency and the trading we have with other markets, and as far as foreign reserves as well as the exchange rate is concerned?
With remittances, it's very interesting. If you look at remittances for April 2019, they actually increased over the previous month, which was a surprise considering that most remittances come from North America, and particularly the US, which has been severely affected by COVID-19. So you'd expect remittances to go down because of the increased rate of unemployment. But also think about it in terms of most of these remittances come for family support back here home. Yes, we had already projected a decline in remittances at the beginning of the year, a decline in growth rate rather than a decline in remittances. That means from double-digit growth, we might see single-digit growth on a month-on-month, on an annual basis.
What about inflation? There are a couple of risk factors. There's COVID, there are floods, there's locusts, there's also the incidence of the Nairobi fly. Does this impact food supply, food security? Are you concerned when you look at inflation for the next 12 months?
Yes, inflation, remember the central bank sets a lower target of 2.5% and an upper target of 7.5%. There are no risks to inflation going past 7.5%. But yes, there's a risk of food inflation because of what you've mentioned, the floods, locusts. Also, there's the impact of supply chain challenges because of the partial curfew. Weather conditions had been fairly good this year until recently because of the floods. But also, we need to take note that these floods have not affected some of the food baskets, say the North Rift, which is enjoying fairly good weather. But so we'd expect inflation to remain at least near the mid-range bound of 5%.
I think now maybe to my final question. So a lot of information, a lot of moving parts. And you sit as the head of research, so you look at different data points, both locally and globally. How would you sum up the investment case for Kenya today and maybe for the short to the medium term? And where are you advising investors to put their money? Is it in equities? Is it in fixed income securities? Or are you telling them to hold on to cash or possibly consider the real estate sector?
There are a few things you need to take into account. One being the investment horizon. So I'll assume that an investor is willing to hold on to the investment for at least 1 year. So I think Kenya is fairly in a good place, especially considering that we're not a commodity-based economy. We do not depend on, say, oil exports, and our economy is diversified from agriculture, services sector, financial sector. So having a fairly diversified economy is of great benefit to Kenyans, or at least to Kenya's economy. With regards to investment, At this point in time, I would say put it in short-term debt, domestic debt securities. That is treasury bills. If you look at the recent trend on the debt auction, you're seeing most investors put in money in the 90-day T-bill. That means they're taking a short-term horizon with expectations that things could shift in say the next 6 or so months. It's still there's a lot of uncertainty as to how long this pandemic will last. No one can tell for sure right now. So most of the people are saying it could extend to the end of the year. So investors are unwilling to commit for the long term. There's a lot of opportunity also on the Nairobi Securities Exchange, especially with regards to the banks and Safaricom. We're seeing valuations at the lowest they've been in some stocks up to even 16 years. So there's a lot of opportunity, especially if you're willing to buy and hold for at least 6 months.
Do you have any stock picks that you could probably leave our viewers with?
Myself, my favorite would remain Safaricom, Equity Bank, and KCB. Bank earnings are, say, more or less more predictable than, say, the manufacturing or allied sectors.
For investors today?
Safaricom, I would say, would make sense at, say, between 26 and 28. Bank valuations as they are very attractive. KCB and equity at 39 shillings levels.
All right. Thank you so much for your time. Unless you have a parting shot, is there anything else that you'd like to add?
On a parting shot, I would say stay steady and also take a long-term view. There's a lot of uncertainty about the future, but as people say that we never know the bottom. So investing now might be the best time to invest.
Fantastic. That was Mr. Renaldo D'Souza. He is the head of research at Sterling Capital. I cannot say anything more than he has said. It could be the best time for you to make an investment and actually grow your wealth from today here on. I think the key thing is to be selective. You could apply your money to short-term fixed government securities, that is the 91-day T-bill, or he's also very opportunistic in as far as some of the stocks on the NSE are concerned, Safaricom, KCB, and Equity Bank. Thank you for joining us today. We hope to see you tomorrow, same time. Good day.